The cryptocurrency market has created a new generation of millionaires overnight, but it has also engineered a psychological trap that most will never escape. You check your portfolio and see life-changing numbers. You feel an overwhelming sense of invincibility, believing you have finally cracked the code to infinite wealth. The sudden influx of capital triggers a massive dopamine rush identical to a gambler hitting the ultimate jackpot. But this is where the curse of new money begins. You start upgrading your lifestyle, buying flashy cars and luxury watches to validate your new status to the world. However, this sudden wealth is built on a foundation of extreme volatility, not structural financial intelligence. The market is a ruthless predator that preys on emotional euphoria. While you celebrate paper gains, you are entirely exposed to the next inevitable devastating crash. Statistical research consistently shows that a staggering percentage of sudden wealth recipients, whether from lotteries or volatile market spikes, lose their entire fortune within a few years. Why does this happen so predictably? It is because holding extreme wealth requires a completely different psychological framework than acquiring it. When you are new money, your identity is tied to the current price of a highly speculative asset. You live in a constant state of underlying anxiety, frantically checking charts at all hours of the night. Every market dip feels like a personal attack on your self-worth. You do not truly own your wealth, instead the wealth completely owns you. You are trapped in a golden cage of your own making, mistaking liquid speculation for actual financial security. To survive the brutal cycles of the market, you must entirely destroy this fragile mindset. The fundamental difference between fragile new money and unshakable old money lies in the architecture of their asset allocation. Old money does not chase the highest possible yield in the shortest amount of time. Instead, they prioritize the absolute preservation of capital and the generation of steady passive cash flow. Financial historians note that generational wealth is constructed through a meticulously diversified portfolio of uncorrelated assets. This includes premium real estate income producing businesses and sovereign bonds. When the crypto market inevitably bleeds, old money remains entirely unfazed because their lifestyle is funded by the dividends of boring but structurally sound investments. They understand that true financial power is quiet, invisible, and completely insulated from the manic mood swings of retail investors and sudden macroeconomic shocks. However, attempting to transition your crypto wealth into traditional assets presents a massive new trap that destroys many novice investors. When new money decides to cash out, they often trigger catastrophic tax liabilities that instantly wipe out half of their gains. Furthermore, moving capital blindly into cash or poorly chosen traditional assets exposes you to the silent thief of inflation and market stagnation. You might escape the extreme volatility of crypto only to watch your purchasing power slowly bleed out in a low-yield savings account. The financial system is intricately designed to extract wealth from the uninformed. Simply selling your digital assets is not a strategy. You need a highly sophisticated legal and financial framework to protect your capital during the transition. Without this elite structural knowledge, your newly acquired wealth remains highly vulnerable. To successfully cross the chasm from new money to permanent generational wealth, you must adopt the exact legal and structural blueprints utilized by the global elite. This involves the strategic deployment of family offices, trust structures, and private holding companies. These entities are not just tax optimization tools, they are impenetrable fortresses designed to shield your assets from litigation, economic downturns, and even your own emotional mistakes. By placing your wealth inside these structures, you separate your personal identity from your financial capital. You cease to be a wealthy individual and become the manager of a permanent financial institution. But how exactly do you construct this invisible fortress without drawing unwanted attention from regulatory agencies? The precise execution of this strategy requires a level of financial engineering that we must now decode. The first advanced strategy in the old money playbook is understanding how to utilize your digital assets without triggering taxable events. The wealthiest individuals rarely sell their core appreciating assets. Instead, they use them as collateral to acquire traditional income-producing properties. By strategically borrowing against a conservative portion of your crypto portfolio, you gain access to liquid capital while maintaining your position in the market. You then deploy this borrowed capital to acquire premium multifamily real estate or commercial properties that generate consistent monthly cash flow. The rental income pays off the debt while both your digital assets and physical real estate continue to appreciate over the long term. This dual-engine strategy perfectly bridges the gap between high-growth digital speculation and structurally sound physical asset accumulation. The second crucial element is the complete automation of your financial decisions to eliminate emotional interference. New money relies on intuition and market sentiment, which inevitably leads to catastrophic timing errors. Old money operates strictly on algorithmic rebalancing and predetermined mathematical thresholds. You must establish a rigid policy that automatically takes profits when an asset exceeds a specific percentage of your total net worth. This capital is then mechanically funneled into your conservative legacy assets regardless of how bullish the market feels. By removing the human element of greed, you protect your portfolio from your own psychological flaws. This disciplined, systematic approach ensures that you are constantly locking in wealth during times of extreme euphoria, and building a war chest of dry powder to deploy during the inevitable brutal market corrections. The final structural pillar of transitioning to old money is the cultivation of absolute financial privacy and operational security. New money loves the spotlight, broadcasting their massive gains on social media and driving highly recognizable vehicles. This loud behavior makes you a primary target for scammers' frivolous lawsuits and targeted physical threats. True generational wealth is notoriously quiet. You must begin scrubbing your public financial footprint and utilizing corporate entities to purchase physical assets anonymously. Your goal is to become financially invisible to the general public while maintaining immense hidden power. The ultimate flex is not having the most expensive watch in the room, but knowing you have enough diversified secure capital to buy the entire building without anyone knowing your name. This is the profound psychological shift you must urgently make. Building generational wealth is a profound responsibility that extends far beyond your own lifetime. You are no longer just a crypto investor, you are the founding architect of a financial dynasty. The wealth you have accumulated carries the incredible potential to educate your future descendants, fund monumental philanthropic endeavors, and alter the trajectory of your entire family lineage. But this is only possible if you abandon the reckless adrenaline of the casino and embrace the stoic discipline of a master capital allocator. It requires immense humility to admit that holding wealth is infinitely harder than making it. When you finally transition your mindset from a gambler to a guardian, you will experience a profound sense of inner peace. The relentless anxiety of the charts will fade, replaced by the quiet confidence of knowing your legacy is permanently secured against any storm. The curse of new money is a psychological disease, but you now possess the structural antidote. It is time to stop playing the volatile game of speculation and step into the quiet power of true generational wealth. Secure your assets, build your invisible legal fortresses, and let the reckless amateurs fight over the daily market scraps. You have already won the financial war, now you must secure the peace. But understanding asset allocation is only effective if you know exactly which traditional assets are completely immune to global inflation. In our next masterclass, we will decode the hidden real estate strategies utilized by billionaires to park massive amounts of capital and generate tax-free generational income. Until then, protect your mind, secure your digital assets, and continue to construct your financial empire with absolute precision and unshakable discipline.